Hello friends, welcome to CEC Live Lectures. Dear friends, today in this session, we are once again going to talk in our series on financial accounting. Dear friends, since previous sessions, we are talking a lot on final accounts. So under final accounts, today we are going to talk on horizontal and vertical presentation. And specifically, we are going to solve certain numericals so that it becomes easier for you to understand the topic in detail. Friends, for the discussion on the topic, we have with us in our studios Dr. Amarjeet Kaur. Dr. Amarjeet Kaur is a professor of accounting, and she is teaching in one of the leading institutions in the country. She is a certified management accountant from USA, and she is an author of numerous books. Her books are admired by the students and academicians worldwide. Friends, if you wish to ask questions from Dr. Amarjeet Kaur on today's topic, then do call us through our toll-free number. Our toll-free number is 1-800-110-430. I repeat, our number is 1-800-110-430. You are requested to call in the last 10 minutes of the lecture so that first you get in-depth knowledge on today's topic, and afterwards, yes, of course, in last 10 minutes, we promise to give answers to your questions. Now, I would like to welcome our guest, Dr. Amarjeet Kaur, once again. Hello, ma'am. Welcome to the lecture.
Hello, Kritika. Very good morning to viewers and welcome on yet another lecture in accounting. As Gitika has introduced that we shall be talking about how to prepare horizontal and vertical final accounts. So that should be the agenda for the day. In the past we have already covered what final accounts are, what are the important aspects while preparing final accounts. Then we covered adjustment entries. We spent 2 whole days talking about adjustment entries. Then now we are ready to solve problems. So I shall be taking one first question, which is primarily pertaining to a firm, and thereafter if time permits we will talk about how to prepare final accounts for a company. So in the first half we are going to target about horizontal presentation of final accounts. So the point is, as of date in India, we would come across 2 different formats of presentation of final accounts. One format when we present horizontal, like which is also called as T-shaped account, T-shaped profit and loss account, T-shaped balance sheet, and the other format which is vertical format. Companies are required to follow only vertical formats, whereas firms are free to follow any of the format. So that is why we need to discuss both types of formats as practiced in the country as of date. So keeping this background in mind, let's go and move forward with one small case which pertains to a firm primarily, and we shall be talking about, or we shall be learning that how to prepare horizontal final accounts for a firm. So let's have a look at the slide, please. The slide says prepare final accounts for the year ended 31st March 2018, and we have 4 columns given in this slide. So particulars and amount. The first column is saying Shri Govind's capital. So this is an individual. That's why I'm saying we are talking about a firm's account, right? We are not talking about accounts of a corporation or a company. So our agenda is to know how to prepare accounts for a firm. A firm could be a proprietorship firm or a partnership firm. So this is the case for a proprietorship firm. So Shri Govind's capital is been given 2,28,000. Then drawings are given 13,200. Plant and machinery is given 99,000. Freehold property 66,000. Then we have been given purchases 1,10,000. Return outwards 1,100. Salaries are given 13,200. Office expenses 2,750. Office furniture 5,500. Discount account debit 1,320. I hope you understand debit means expense. By this time we have spent about 4 or 5 lectures already on this particular topic in detail. So I expect that viewers who are regular must have understood that debit balance of a particular account, especially discount, is that we are referring to expense. So it's not that we have received discount, it is something that we have offered discount, so it becomes an expense for the business. So sundry debtors 29,260. Then we have been given 10% loan to Krishna on 1st April 2017. So whenever we have been given a particular date pertaining to any item of final accounts, it becomes our responsibility to be very careful. Why? Because date would help us to calculate how much interest is payable or receivable. Here is a situation when we have given loan to somebody, so we are going to receive interest. But since it has been given on 1st April and we are preparing account 2000 for the year 2018, it means the interest is in question for 12 months, and then we have to see how much we have received, how much we have yet to receive. Okay, so with further it says cash at bank 29,260, bills payable 5,500. Then we have been given stock on 1st April 2017, which means this is the opening stock, because if you refer to the title at the top, it says 31st March 2018, which is the year ending date. So the stock on 1st April 2017 is 38,500, wages 35,200. Then we have sundry creditors 44,000, postage and telegrams 1540, insurance 1760, gas and fuel 2,970. Then we have been given bed debts 600, office rent 2,860, freight has been given 9,900, loose tools 2,200, factory lighting 1,100. Then it says provision for doubtful debts 880, interest from Krishna 1,100, then cash in hand 2,640, and the last item given is 2,31,440. So I would recommend, if you are with me, kindly take a note of these figures, or else you may take a picture with the help of your mobile. So that you have this data in hand while we proceed further to the next slide and talk about adjustments. So with this figure in hands, let's move forward and have a look at the adjustments. So this is the additional information given to you. It says stock on 31st March 2018 was valued at rupees 72,600. So again we need to refer to date. So date is very important, because this is the closing stock. We have been given the opening stock and this is your closing stock. The second is a new machine was installed during the year costing rupees 15,400. So this is again a very important information, as we have discussed in the very last lecture, that whenever we have been given any information in the additional information, that particular information needed to be processed twice, right? We need to take it to two places in the final accounts, because we have either ignored it completely or we have omitted it completely while preparing trial balance. So we would remember that rule which we learned last lecture. So it further says, but it was not recorded in the books as no payment was made for it. So whether the payment was made or not, we should have recorded. So this is a matter of omission. We omitted. This was a mistake on our end. So it means it is going to be processed under the adjustments. Wages rupees 1100 for its erection have been debited to wages account. So if you remember, let's spend 1 minute to discuss this point. If you remember, in the initial lectures in this particular topic, we talked about one concept, which is accrual concept, and another concept we followed as cost concept. So these are the two important concepts. Cost concept says that whenever we purchase any new plant, machinery or any non-current asset, in that case, whatever we spent to bring that asset into the premises and then whatever we spend to bring that asset into use, right, that all is going to be debited to the cost of the asset. So, this particular fact should be remembered throughout whenever we are preparing final accounts. So, we need to follow this rule, which is a very important concept under accounting standards, and that whatever we are spending on erection, in this case we are spending 1100 of wages, not for production, right. Wages are generally paid for production. So, we need not to get confused here. We should be sure that these wages are clearly being mentioned, being spent on erection of the plant and machinery. So, keeping the concept of cost concept into consideration, we shall be adding this cost to the cost of plant and machinery or any other non-current asset, whatever is given in any question. So, this wages would be reduced from the wages account. So, my actual wages charge would be reduced by 1100, and the additional purchase of machine, whatever the amount is given, we shall be adding to the cost of the machine before calculating depreciation. So, we need to keep these two facts in hand while preparing or proceeding further. The third point says, depreciate plant and machinery at the rate of 33.33%, furniture at the rate of 10%, freehold property for 5%. Then further it says, loose tools were valued at 1760 on 31st March 2018. So, when here again we need to discuss for 1 minute. Loose tools are not treated as normal non-current assets. Kindly pay attention on the discussion, and let us forget the slide for a minute. So, we have been given some value in the trial balance for loose tools, and we have been given some value of loose tools in the additional information which is for adjustment. So, what does it mean? What conclusion can we draw? So, in such situation we have to follow only one guideline, and the guideline is that compare the given value in the trial balance with that of given outside the trial balance. Alright. So, we have two values for loose tools, one given in the trial balance and the second value 1760 given in the additional information. And to calculate, loose tools are subject to depreciation, but the method to calculate depreciation is little different. So, loose tools are basically not treated as very much as current assets, but they are not very like as non-current assets. So this is kind of hybrid treatment. So, we have to be careful. So, how do we deal with this situation? So, let us assume we will go and get back to the values given in this question. I am ignoring the exact values, I am discussing for the sake of your learning. So, let us say 2000 were given as loose tools in the trial balance, and at the year end it says 1500s are there left as unconsumed. What does it mean? Very simple, that you have consumed the difference between the beginning value which was 2000 and the ending value which is 1500, and the remainder, the difference you used during the year. So, that is my consumption of loose tools, which would be 500 in this example, and that should be debited in the profit and loss account. And the remainder, which is with us 1500 value, which is given in the additional information, would go to balance sheet under the assets, right. So, this is how we deal with loose tools. So, with this discussion, now let us move forward to depreciation. The third point in the slide is depreciate plant and machinery at 33.33%, furniture at 10%, and property which is freehold at 5%. So, here we would be considering that in plant and machinery we need to add up the new purchase as well. The purchase which we made during the financial year should be added back to the opening value of the plant and machinery to get depreciable amount. So, your depreciable amount could be X in the beginning, whatever you add during the year should be added up in total, and then you calculate at the rate of given percentage, right. So, we shall be calculating depreciation later. So, let us move to the next point. It says loose tools were valued, and after that the next point is of the sundry debtors rupees 660 are bad and should be written off. So, we have been given additional value of bad debts. This is what we discussed immediately last lecture, right. So, we have sundry debtors given in the trial balance, and we have been given additional bad debts as well. The 6th point says maintain a provision of 5% on sundry debtors for doubtful debts. So, we shall be calculating provision for doubtful debts after considering additional bad debts given in this question 660, right. So, and the last is the manager is entitled for commission of 10% after charging such commission, and this adjustment has again been discussed that we could be given two situations. One, that charge commission for manager before charging commission, and or calculate commission after charging. So, before and after word is very important while we are reading such statement. So, in this question, in this particular statement, we have been given after charging, and so I hope you remember when we have been given the word after means we need to take up the given percentage divided by 100 plus the percentage given, right. So, if it is 10% in this case, so it would be 10 by 110, all right. So, this is how we have to deal with all the adjustments. So, with this data in hand, I would again request you take a picture of adjustments as well. So, and then let us move forward to the solution part. So, important is especially when we are targeting to solve a case in final accounts, because it is a very lengthy problem always, and information is so scattered. So, it's always very important to have information handy and discuss and understand question, spend more time on understanding the question than the solution. Solution would be upright, will be correct, provided you understand the question well, okay. So, that is why I spent about so much time on making you or helping you understand question. So, let us go further now and have a look that how should we be solving the problem. So, here is trading and profit and loss account. Since we are preparing this for a firm, we are not preparing final accounts for a corporation. So, I am not using the title, otherwise I shall have been using statement of profit or loss, and here I am using trading and profit and loss account considering this pertains to a firm, all right. So, now let us see how should we be preparing this account. Have a look at the slide. It shows you 4 columns: particulars, amount, right. In the particulars, which is basically debit side, it shows to stock, which is actually opening stock. The amount is 38,500 as was given in the question. Then it says to purchase 1,10,000 less returns. So, this return we have already discussed that returns were given outwards. So, you need to be very careful. What is the language of the question? Had it been outwards, means you purchase, out of those purchases you are sending something out. So, some material is moving out of the business. So, that is why that is what we say outward, okay. So, it is returns outwards, 1,100 given. So, out of the purchases we are subtracting this amount, the remainder is given in the amount column. Then it is given to wages 35,200, and then it says we are subtracting. If you look at the solution, we are subtracting the wages which we spent on erection of machinery, right. So, it is 34,100 after subtracting those wages which were spent on erection. The next item is gas and fuel. So, 2,970 given as it is in the trial balance. So, we are just adding it to the expenses. Then we have freight The freight amount was given 9,900. So, there is no adjustment pertaining to freight. So, we have taken the whole value as it is. The next item is factory lighting 1,100. Alright. So, these are the expenses which are taken on the debit side of trading and profit and loss account, and primarily this particular section is only trading account. We have yet to reach to the second section of trading and profit and loss account. So, after completing the debit items, let us go to the credit item. In the credit side, the first important item is sales. They were given 2,31,440. So, we are taking the whole amount as it is, and then the closing stock. Closing stock, if you remember, and you can refer to the data if you have taken the picture, closing stock was given outside the trial balance, and keeping the rule in mind, outside trial balance items would go at two places. So, we have taken it once here in the credit side. Follow my cursor, I am showing it here 72,600. So, right. So, I hope you are chasing my cursor here, and then the same amount would go to balance sheet under asset side, current assets. Alright. So, now if we add up sales and closing stock and subtract all the expenses, from 38,500 to 1,100, the difference is coming out 1,08,570, and this is your gross profit, which would go to the second section of this account. So, what is the second section? The second section, as we understand, is profit and loss account. All right. So, now this is what we calculated, but let us spend 1 minute to understand why did and how did I choose those items which we actually debited or credited. So, for that matter, we need to understand that trading account is prepared for the purpose of knowing gross profit or gross loss. So, that is why we prepare trading and profit and loss account. So, when we have to find out gross profit or gross loss, means we have to take the net value of sales. When I say net value, means sales both sales both on cash and credit less any returns. So, that is what net value of sales means, and out of that net sales we would be adding closing stock and we would be subtracting all the expenses. So, we add closing stock and sales together on the credit side, and on the debit side we take all those expenses which are essential to convert the raw material into saleable product. This is a vague and a very broad statement. So, how to actually identify item would depend upon your practice and remembering this rule, that we are targeting to find out gross profit or gross loss, which is basically the difference of your net sales and direct expenses and expenses made on either purchases or made on manufacturing. That would be in case of manufacturing accounts, which I am ignoring completely. So, primarily it becomes on trading, on purchases. So, if you remember the equation of cost of goods sold, so we have to actually follow the equation of cost of goods sold. We should be subtracting cost of goods sold from net sales, and the remainder is your gross profit or gross loss. So, keeping this fact in mind, I have selected these items. So, if you look at the item is like freight, gas and fuel, they all are direct expenses. Direct expenses spent on either production or converting the purchased material into saleable condition. So, that is what is basically taken in the trading account. So, this leads to having the value in hand gross profit of 1,08,570. With this values in hand, let us go further and have a look at this slide, which is talking about now profit and loss account. So, profit and loss account is have a look at the slide. You will see we are beginning with the same amount gross profit. 1,08,570, right? So taken on the credit side. This amount was there on the debit side, and now it comes on the credit side. It is always true. If we have loss, it would be shown on the debit side because that side should be lower. So the difference of any particular account when we are balancing is shown on the side which is lower in value. That's how, since the debit side we prepared the trading account, and since the debit side was lower in value, the gross profit was shown on the debit side, but actually it would be transferred on the credit side of profit and loss account. Okay, so it has credit balance. So account has credit balance, not the debit balance. The amount is written on the lower side, but the balance of the account is known by the side which is higher. So never get confused with this important aspect. So since the value on the credit side of trading account was more than the value on the debit side of the account, that's why I would say trading account has credit balance. Okay. So this gross profit brought down is 1,08,570. Then the next item is interest, which is credited. It is in front of your screen, and kindly follow my cursor. I am showing you where I am referring to. So my interest is 1,100 given. So if you remember, it was not said credit or debit. So here we have to use our logic. How did I decide to put it on the credit side? So try to understand the logic I am going to give. Though excuse me. So though it was not said that a credit or debit word was not there with the statement, but it says that we have given loan to Mr. Krishan. So if I am giving, so as a by using my common sense or general sense, I can understand that if I am giving loan, I am expecting to receive interest. I am not supposed to pay interest on the loan I have given. I am supposed to receive. So irrespective the word credit or debit is not given, we can make out. So there could be a situation when in a given particular case or question you have been given credit or debit word, but there could be a situation where it is not given. When it is not given, then we have to understand by using the other information in the question. So that's what I used. So I used the information given that Krishan has been, so we have extended loan to Krishan. Krishan has been given loan by the company in question, by the business in question. So this was 1100 given. Now the point is, loan was at 10%, right? And loan was how much? 44,000 or 40,000? 44,000. So it means 10% of 44,000, total interest receivable becomes 4,400. Alright. But how much did we receive? 1,100. So receivable amount which has become outstanding, which has accrued and has become outstanding, should be actually treated twice at two places. One in the trading account and second is in the balance sheet. So keeping that important fact in mind, I have added this 3,300 here in the profit and loss account in the credit side. So my total interest becomes 4,400. And if you look at the item in the debit side, so we have couple of items which we selected from the question given, which we shall be pursuing. The debit side of this question would be discussed after a short break. I hope you were able to understand whatever we discussed. We discussed 3 or 4 important adjustments here. We actually practiced, one, how to deal with the accrued and outstanding interest. Second, how to treat additional wages which are not meant for production. Third was how to treat outward expenses, expense returns. Another was how to deal with closing stocks. We have already covered all these 4 adjustments so far. The remainder of the question of the problem shall be discussing post a small break. Thank you very much for being with me for these 30 minutes. Thank you.
With this note, thank you, ma'am. Thank you so very much for giving us this productive session. Friends, you are requested to be with us as we are back after a short break and would be discussing more. Thank you.
Thank you.
Hello friends, welcome back to this session. Friends, as you know that today we are talking on horizontal and vertical presentations, and we are solving certain numericals. We believe that you are going to get more and more of knowledge through this session too, as we have with us in our studios Dr. Amarjeet Kaur. Dr. Amarjeet Kaur is a professor of accounting, and she is a certified management accountant from USA and an author of numerous books on accounting. Friends, if you want to take advantages from her experiences, then do call us through our toll-free number. Our number is 1-800-110-430. I repeat, our number is 1-800-110-430. You are requested to call in the last 10 minutes of the lecture, and yes, of course, we request you to ask questions relevant to the topic only. Now, I would like to welcome our guest, Dr. Amarjeet Kaur, once again. Hello, ma'am. Welcome to the session.
Hello, Geetika. Thank you very much. Welcome back, viewers, and very good afternoon to you all. So, we shall be proceeding with the part we left in the first half. We have already covered trading account, and now we will proceed with the remaining part of the profit and loss account and followed by balance sheet. This should be the agenda. As we know, we have already covered 4 important adjustments in the last 30 minutes. Now, I shall be talking about the most important and the difficult adjustment, which is how to deal with bad debts, which is given in this example in this case. So, how to deal with additional bad debts and how to create provision for bad debts, that is very important aspect being covered in the debit side of profit and loss account as well as the coming balance sheet. So, let's recall the data given in the question. You may like to refer to the data if you have taken the picture. So, let's have a look at the slide, please. It says 2 salaries 13,200. So, this value was given in the question, and I have just taken the same value as it is. Since this salaries means salaries are spent for office and administration. So, salary would be going to profit and loss account. Had it been given salaries and wages, so kindly note down this important aspect. Had it been given salaries and wages, it will go to the profit and loss account. Had it been given wages and salaries, then it goes to trading account. So wages is assumed to be spent for production purposes on those people who are actually working on the product, and salaries are spent on the people who are into policy making, administration, like salaries would pertain to accountant, general manager and all those people, right. So this demarcation between salaries and wages is important while preparing final accounts. So salaries goes to debit side of profit and loss account, 13,200. Then the second item is office expenses, 2,750. It is given as it is, so no adjustment required here. The third item is postage and telegram, 1,540. Again this value is given as it is, we are taking, no adjustment required. The next item is insurance, again has been given in the question to you, 1,760. Then office rent, 2,860, given in the question and been taken here on the debit side of profit and loss account. Then it says discounts, 1,520. So this discount amount was actually given on, in bracket debit. As we know, discount could be as an expense and discount could be received as well. So here discounts have been taken in the debit side because clearly says debit, right. So if it doesn't say debit, then what would you do? So then you will have to have a look that how the trial balance has been presented. I am discussing all possible scenarios, right, so that you are able to cope up with the given situation when you are actually solving on your own. So the next point here is that you may look at how and what is the format of the trial balance. If trial balance is been presented in a way where debit and credit sides are mentioned, debit balances and credit account balances are mentioned, then we need not to worry. Then whatever is given on the debit side or the credit side, debit balance or the credit balance, we will take it accordingly. But if you have noticed, this particular question, in this particular case, we have not been given the trial balance in the format where debit balances are segregated from that of credit balances. Here they have been given together in a running format. So our responsibility becomes little higher here. So we need to be more careful, right. So we are taking discounts 1520 on the debit side. The next item is bad debts. So here bad debts are given within the trial balance 660, right, and out of after that the additional information says that we have 600 rupees of additional bad debts. So that additional bad debts are added in the given bad debts, and thereafter we have to, the next step is that we have to calculate provisions for bad debts. So what would we be doing? So here first step is that we need to look at the given amount of debtors. So I am going back to, purposefully I am going back to the question. So have a look, what was the amount of debtors given? So sundry debtors is somewhere given here, 29,260, and I hope this value is with you already. So keeping this value in mind, 29,260, so we have to see that we have been given additional bad debt of 600, right. So additional bad debt would be added, and then thereafter when we have to calculate how much amount to be transferred to provision for bad debt, we shall be subtracting the amount of additional bad debts from the given debtors and whatever the remainder is, on that we shall be creating the provision at a given percentage. So that's how this amount 1430 comes out to be. So 1430 amount comes after considering these two points, that subtract the amount of additional bad debts given outside the trial balance from the debtors, and then thereafter calculate the amount of amount to be transferred to provision for bad debts with the help of percentage given to you. All right. So, that is how this situation is dealt with. So, after that whatever the amount comes out, that is going to be shown in the trial in the profit and loss account, provided there is no old provision given. So, it means there is another step. So, I purposefully chose this problem where we have old provisions as well given to you. Okay. So, once we have reached to a value after taking into consideration additional bad debts, after taking into consideration the amount of provision for bad debts, so subtracting these two values from the given debtors, so the remainder is something which should be charged to profit and loss account if there is no old provision existing. But in this question we have an old provision for bad debts very much given in the trial balance, which must have been created in the past. Okay. So, what is the next step? The next step is that this amount of old provisions would be subtracted from the amount calculated so far, which was 2690. So, the amount calculated so far was 2690. Out of that additional the previous provisions given 880 are subtracted, and the remainder comes in the total amount column. So, if you look at the slide, it is 1870. So, after treating all the three things, what is the amount of debtors, what is the amount of additional bad debts, what is the percentage of provision for bad debts to be calculated, right. So, this is how we reached to amount 1870. Then after that we have to calculate amount of depreciation. Mind you, in this question here in the solution you can see the value 42,700. So, if you follow my cursor, it is showing you the amount of depreciation. Now, you would be wondering where does this money or this amount come from? Of course, you have a valid question. So, this amount comes from after calculating depreciation on all the items mentioned in the question. We have been given the percentage and we have been given non-current assets. So, based on the given percentages, one was 33.33, another was 10% and third was 5%. So, based on that we have calculated the total amount of depreciation. Here I would emphasize that you have a choice. You need not to follow this instruction which I am saying. You can choose either to show the total amount of depreciation and then put a note against that and show in the notes that how did you calculate this amount. This is one way to deal. Another is that you just simply calculate amount and then show as depreciation for one item, then second item and third item, and then add up together in the inner column and write down the value in the outer column, right. So, you have the liberty to practice either of them, whatever you feel comfortable with. Okay. So, this is what you have to do while dealing the situation of depreciation. After that, the next item is that how to calculate commission for manager. So, here again this is an adjustment. It is given outside the trial balance, and as I mentioned, I did mention while discussing the question itself that we should be paying attention to the word after or before. Here the word after is been given, which means percentage given to be divided by 100 plus percentage. Had it been before, then it would be percentage given divided by 100 only. So, never forget this particular formula, otherwise your question would not match, you would end up with a wrong answer. So, 10% commission to be charged from the P&L account after giving such commission. So, it means I need to stop here. I cannot calculate my gross profit or gross loss, mind you. What do I need to do? I need to add up the values of all the items on credit side. I need to add up values of all the items taken so far in the debit side of profit and loss account. And here it is very much important that you do not ignore any item till this step. This calculation of manager's commission should be the last item. Had there be a mistake on your end that you omitted or one item, even 10 rupees, your question is going to be incorrect as a question. So kindly note it down as a matter of caution that we have to pay attention on all items given and to ensure that we do not ignore not even a single item of 1 rupee even before reaching out to this step where we are calculating how much to give to manager. Okay. So after keeping this fact in mind, we have to add up all the items in the debit side of the profit and loss account. Then those items, whatever the sum you get, that value should be subtracted from the total value of credit items, and the remainder is subject to be charged commission at, right. So in this question, our difference between the two sides, that is credit and debit sides, comes out to be 44,800. Yes, 44,800, not 40,800 which is there in front of you, which was there in the slide if you noted down earlier. So the difference comes out to be 44,800, and now at this difference of 44,800 we shall be calculating commission by multiplying it by 10 and dividing it the whole value by 110, which would come out 4080, right. So this 10% commission is calculated considering it's been given after charging the commission. Okay. So now this becomes the last item of expense to be debited in the profit and loss account, 4080, and after that now this would be subtracted from the credit balance, and now the net difference comes out to be your gross profit in this question, 40,800, right. So my cursor is showing you the gross profit was there 1,08,570. After considering all the item of expenses, we have 40,800 as net profit, right. So I hope you could gather that how to reach out to net profit or net loss calculation. Let's move forward and see that how to prepare balance sheet while solving a question in final accounts. We shall be considering all the discussions whatever we have so far in the last lectures in this regard. So no rule change, every single rule remains same. So let's have a look at the slide here, that how to prepare balance sheet. So first of all, be clear that we do not have debit and credit sides in balance sheet. This is the important thing to remember. We have liabilities and assets. So another important thing is this, that we are so far discussing only horizontal presentation. We have yet to touch upon vertical, right. So under horizontal, how many columns needed to be there? Under horizontal, we have, so this is basically T-shaped account I am talking. So the capital letter in English, T, right. So if we write T letter in English in a capital format, so then this is how it should look like. Okay. So we have 4 columns here. The first column is for assets, second is for amount, third is for liabilities, and fourth could be amount. I would repeat, you need not to be chasing the same order. You can begin on the left hand side you may write assets, and then on the right hand side you may write liabilities. You have the full liberty. Most of the books would be using liabilities on the left hand side. So for the purpose of ease only, you may choose to write liabilities on the left side, but it is not required by law by income tax laws or by Companies Act, right. So, you are free to begin with either liabilities or either assets. So, as most of the books would begin with liabilities, so for the purpose of same ease, so that you could correlate when you are referring to any book, I am also taking liabilities as in the first column. Okay. So, we have taken liabilities, then amount, then assets, and then amount. Another point is that in liabilities and assets, we can present the information in two ways, by two orders in fact. One order could be that you would follow the order of liquidity, and you may follow the order of permanency. So, what is the order of liquidity means? All the items in liabilities as well as assets should be presented from the most liquid item to the least liquid item. That if you decide to do that, make sure you do it for both sides. You do not have the choice to present items in liabilities as per liquidity order and assets as per permanency order, right. You have the choice though to choose either permanency order or liquidity, but point I am making is here is that whatever you choose, either the liquidity order or the permanency order, apply it for both the side. Okay, I hope I could make that point clear. So, so after that, let's have a look at the actual data and see how to prepare the account. So, here it says capital 2 lakh, kindly have a look at the slide. It says capital 2 lakh 28,800 and then add net profit. So, where does this money 40,800 come from? Kindly think for a while. Yeah. So, I hope you could gather that just in the last account, which was profit and loss account, we have calculated this amount of net profit. We ourselves have calculated this amount of 40,800, right. So, 40,800 is the amount which has been calculated. The total comes out to be 2,69,600. This amount should go to the amount column, right. If there is no withdrawal being made, if there is no further adjustment required in this question, but we need to go through the data given very carefully and see, do we really need further adjustment or not. Yes, in this given question we have been given drawings, right. So, it means the beginning point to put up the value should be that you write the value of capital, then add the amount of net profit and then subtract drawings. But if there is a net loss, what would you do in that case? Had there been a net loss, then you should be subtracting net loss out of the given capital and then drawings as well if drawings are given, right. So, we should be following this discussion pertaining to capital, drawing and net profit. So, since we have net profit in this question as an outcome of preparing profit and loss account just few minutes ago, so we shall be adding the amount of net profit and thereafter we shall be subtracting the amount of withdrawals, and the total value after these two adjustments comes out to be 2,56,400. All right. So, here my cursor is showing that 2,56,400. Okay. The next item is bills payable 5,500. Then we have sundry creditors 39,400, and last item on the liability is manager's commission outstanding 4,080. So, if you kindly notice that all the items here are given in the order of permanency. I would have actually raised a question to you, decide after looking at the data, decide either we are following the permanency order or we are following liquidity order. But yes, I have pointed out that this particular side, which is asset side, we have followed the order of liquidity. So, order of permanency, sorry. So, capital being the permanent item, the most permanent item, and the commission to be paid to the manager is basically salary. So, something due to employees, manager is employee of the business, right? Something due to employee is the some liability of the business, it's a legal liability to be paid immediately. So, that is why that outstanding amount is been shown at the end. So, from most permanent to most liquid, this is the order we followed, okay, for liability side. Now, let us have a look on the asset side and see how we have dealt with different items. So, in the asset side, we have been given plant and machinery 99,000. Kindly have a look at the slide. 99,000, and then we have added the new purchase made during the year, which is given to you in the question. So, the total comes up to be 1,15,500, and from that amount we shall be subtracting depreciation. So, 38,500 has been subtracted. The remainder, the total amount has been shown in the amount column 77,000. The next item is freehold property. Mind you, I have because of the space would have been issued on this slide, I have already subtracted the amount of depreciation out of it. This is the net amount of freehold property. Okay. So, freehold property 62,700 after depreciation. Then we have office furniture 4950. Again, this amount is net of depreciation, means the amount which was given to you of furniture in the trial balance, out of that calculated amount of depreciation at the given rate has already been subtracted, and then this amount 4950 has been written. Then thereafter tools has been written 1760. This amount was given to you as it is. This comes here. Closing stock was given outside the trial balance, and the rule is very simple. Anything which is given outside the trial balance would go at two places while preparing the final accounts, and that is how this closing stock was taken in the trading account first, and the second time we are taking in the balance sheet. So, that is what we have done for every item so far. So, after that we are taking sundry debtors. Sundry debtors net amount is given. Out of that, additional bad debts which were obviously given outside the trial balance, and we are subtracting. So, 660 additional bad debts have been subtracted here, and then thereafter the new provisions created for expected bad debts in future again have been that amount has been subtracted out of the debtors amount, and after these two adjustments. So, both the items have been dealt at two places. So, we are following that rule, that is intact. So, additional bad debts were treated at profit and loss account, and so was with provision for bad debts, and both the items have been taken in balance sheet as well. Alright. So, after this the net amount comes to be 27,170. Thereafter we have taken loan to Krishan. This is our asset, right, the most liquid asset before cash and bank balance. So, 44,000 has been taken. Out of that we have added interest which is outstanding 3,300. So, the total amount of assets becomes 47,300, and thereafter the last two items are cash at bank and cash at hand. So, 29,260 and 22,640. So, the total of the balance sheet matches, liability side and the asset side matches with each other. This is 34 lakhs 25,380. So, by this question is over, and we could cover only horizontal, which I was already suspecting that we may not be able to cover vertical considering the length of the case. So doesn't matter. So we are going to cover the vertical format as well as a question on vertical format and presentation of final accounts in the very next lecture on this in this week on Friday itself. So be with us, watch us on coming Friday. Thank you very much for being with me. Thank you.
With this note, thank you, and thank you so very much for giving us this prolific session. To us, friends, you are requested to write to us at info.cec@nic.in. Here you can post your questions as well as your feedback too, and if you wish to have a session on particular topic, do write to us on the same ID. We are taking your leave with the promise that we are going to meet again on Friday and would be discussing more. Till then, take care. Goodbye. Thank you, ma'am. Thank you so very much.
Thank you, Kritika. Thank you, viewers.